Investing is an art, not a science. 50% of investing is actually using your mind and focusing not on just your investments, but on your mind and how you're going to resist the market. Hello, everyone. Welcome to Just Invest Today. And today we're going to be talking about Warren Buffett and some very important quotes he said over the couple of years. And today we're going to be talking about some quotes about patience, opportunity, and sticking with your investments long term. For all of this is for your long term success in the stock market. The first quote about Warren Buffett talks about patience. We don't get paid for activity, just for being right. As to how long we will wait indefinitely. When Warren Buffett talks about patience, he's talking about waiting in the stock market patiently, waiting for the right investment to come. And the thing about Warren Buffett is that he already knows almost all the stocks in the market. He's run to all the 10Ks and he knows most majority of the companies already in the stock market. So he knows when the stock market goes through its ups and downs, and when it's able to, he can pounce on those opportunities when it gets to his price that he wants to. Warren Buffett talks about this guy named Ted Williams, a famous American baseball player. In one season, he hit 400. And in the science of hitting, he talks about waiting for the right pitch. And exactly that's what investing is about. You wait for the right pitch. Because as soon as that right pitch comes, you hit it. And when you hit it, it's gonna be a home run because you're waiting for the exact opportunity. So Ted Williams would actually have an area where he likes his pitches to become, and then when those pitches come to those areas, he would hit it. And the good thing about investing is that there's literally no strikes in investing, so we can wait as long as we want to, just for the right pitch. So when we get it in the right area, we hit it out the park. The second important quote by Warren Buffett, he talks about inactivity. Warren Buffett says that inactivity actually strikes us as intelligent behavior. And when we think about that quote, is this like, why does he think inactivity is intelligent behavior? So when you break it down, when you're inactive, you're actually thinking more long term. You're not constantly looking at the stock market. And when you constantly look at the stock market, that's going to affect your gains because you're going to think about maybe I should sell this and maybe I should sell that. Maybe I should do this and do that just because there's a little bit of ups and downs in the stock market, which is always going to happen. With that, he's also talking about every time you make a transaction, you have to pay a fee, and that's going to ruin your overall gains. And then when you even make a little bit of money on your stock, you have to pay a capital gain tax if you sell it, and if you sell the stock. So all of that is going to affect your stock market gains. So inactivity is actually very intelligent behavior in the stock market. So Warren Buffett talks about patience first, and then he talks about opportunity. And opportunity is so important because usually wonderful companies are not on sale, and we gotta wait for the perfect opportunity to buy these wonderful companies. So a quote by Warren Buffett: great investment opportunities come around when excellent companies are surrounded by unusual circumstances that cause the stock to be mispriced. When these opportunities come, we gotta understand if it's a short term or a long term problem. Because a long term problem, you don't want to invest into that company because then it's going to be lasting years and years and years. If it's a short term problem, we could wait for that stock to bounce back because when that short term problem happens, it's going to drain the company down. And then when that problem gets fixed, it's going to shoot back up. So, just to give you an example, hypothetically, say the new iPhone comes out and it has a bug as soon as it comes out, that actually might drop the stock price a substantial amount if that thing can't get solved right away. And that's when we want to invest in a company if it's cheap enough. But as soon as that problem gets fixed and when we already invest in that company because we know it's a short term problem, that company is going to shoot right back up. And that's when we want to pounce on those opportunities when we understand the short term problem and we know it's at a good price to buy the stock at. Just think about what happened during March and April, the pandemic. This actually lowered prices of stocks that were still good investments. So when they lowered those prices, that was your chance to invest into these companies because that was the opportunity. You know this is a short-term problem. It's going to be fixed in a year or so or 2 years. And even then, the stock market has shot right back up. Big opportunities come infrequently. So when it's raining gold, reach for a bucket, not a thimble. And that's a perfect thing about what Warren Buffett has said. When you think about that quote, Warren Buffett wants you to invest at least 10% of your wealth into that company, depending how confident you are in that business. And we are confident in those businesses because we're only buying wonderful businesses that are going to last at least 5 to 10 years, hopefully. And those are the companies that we want to invest in. Lastly, Warren Buffett talks about sticking to companies long term. And when we stick to companies long term, our money compounds. It keeps growing and growing and growing. We don't listen to the news, the headlines, unless the company's values change and what we thought about the company changes. We hold on to those companies because they're going to keep doubling our money. So we hold those companies long term. A quote by Buffett about sticking to the long term. Through marginal business purchases at cheap prices may be an attractive short-term investment, but they are the wrong foundation on which to build a large, enduring enterprise. And when we think about this quote, we're thinking about we have to buy these wonderful companies that are going to compound our money. If you just buy cheap stocks and they're not that good of a company, then what are we doing? We're going to have to sell that company eventually, and that's not what we want. We want to hold on to these companies as long as we can because those are going to keep compounding our money without selling them, without any taxes, and without any capital gains tax. So that's what we want as stockholders, as investors of great businesses. If you follow those steps, you're guaranteed to make money in the stock market. If you like this video, please leave a like, subscribe to my channel, and I'll see you in the next video.